Where do you want to keep your gold? That's a question being asked by Malca-Amit. The Israeli logistics group opened the brand new steel-reinforced doors at this secure warehouse in Hong Kong in September.
In terms of precious metals clients, we see, I would say, four different clients. One of them is very easy, high net worth individuals. They have a few kilograms of gold, they want to store it someplace secured that will be liable for physical loss. We provide a service. Other companies will be bullion dealers or traders.
Malca-Amit has facilities like this one in cities like New York, London and Geneva. Previously, the company's business was based around the diamond trade, but recently its attention has turned towards Asia, and with good reason. Over the last 2 years, the balance of where the world's wealthy come from has changed. Recent reports from 2 wealth management groups have shown that while the total volume of wealth held by the rich is still greater in the US and Europe, the number of high net worth individuals from Asia now outnumbers both regions.
We have essentially seen levels in terms of high net worth wealth in the US being stagnant for a decade. We have essentially also seen Europe essentially, faltering under, huge, I would say, economic pressures. So we are actually quite happy to see that Asia is still a place, to become rich.
And for wealth managers, that means changing the way they do business.
There is still some very finite differences between high net worth people in individuals in Europe and the United States. In Asia, discretionary portfolios are really only about 10% of the actual portfolio. In Europe, you run in the numbers of about 30 to 35%, and similar in the US. So there's still a high concentration of risk in Asian portfolios. And a lot of that has to do with the fact that the first generation money is very relevant in a lot of the high net worth individuals.
The fact that Asia's wealthy are more likely to be first-generation entrepreneurs is important because it means that their money is much more often tied up with the business that's created that wealth, which means that the business of wealth management more naturally goes hand in hand with the investment banking type activities of listing companies on stock exchanges or raising funding for other things such as mergers and acquisitions. It also means that from an investment perspective, these entrepreneurs tend to have a much higher risk appetite, and so they're much more likely to be interested in things like investing in stocks in the equity market themselves, investing in forex markets and using derivatives for added leverage.
Hong Kong has more Rolls Royces per head than any other city in the world. And with great personal wealth and business interests that overlap, Asia's entrepreneurs are the ideal clients for the world's high-end banks. But on their own, Asia's rich can't deal with the problems of the financial services industry, especially now that China and Asia are starting to feel the pinch of the global slowdown. Tom Griggs, Financial Times, Hong Kong.